Thank you very much, Philip. Thank you. Please be seated. Well, before we move on to our first global chat today, just a few reminders for all of you. Our investor matching is running concurrently throughout the day. For startups and investors who have scheduled investor matching meetings via our online platform, please be reminded to check in for your meetings via the provided link. Please also watch out for our SMS or email reminders. For investors who would like to schedule meetings on-site, please also look for our staff at the investor matching counter at the Seaview Concourse for further assistance. Please also visit our founder stage for the power pitches from local and international startups. Now, let's move on to our first global chat today, which will discuss venture capital ideals in a universal world. We're delighted to have Ms. Rebecca Fennon, founder, Silicon Dragon from California, to moderate the session for us. Joining her, we have several panelists, and they are Mr. Alan Iyer, Venture Partner, Lightspeed Venture Partners, Silicon Valley. Dr. Su Xu, Managing Partner, Amino Capital, Silicon Valley. Mr. Jonathan Chiu, Managing Director, Honey Capital, Silicon Valley. And Mr. James Tan, Managing Partner, Quest Ventures, Singapore. Now let's have our moderator and our panelists online. Okay, we can see every one of you here. All right, so Rebecca, over to you.
This is an amazing panel. In getting prepared for this panel, we had one person in quarantine and another person in the hospital. So it's amazing that we're all here together this evening or this morning, whatever time it is. So thank you, Cyberport Venture Capital Forum, for inviting us. And we're glad to share our ideas about the free flow of ideas and the exchanges without restrictions and how political views are being shaped by country borders. So I'd like to, these are really idealistic kinds of issues, which is kind of a departure for a venture capital forum. So I have to applaud Cyberport for assembling these issues and for discussion. These are very topical issues around the world with a lot of conflict, Russia, Ukraine, and Greater China issues, and so these tensions are not going away. So let me just start with a few very broad questions. How are your investing approaches? How are they changed by political implications and geopolitical? Basically, is what we're talking about. So who would like to start with that? Okay, Anand, how about you? You're here in the free-flowing idea center of the world, Silicon Valley. So how do you think the free expression of ideas encourages innovation and creativity in Silicon Valley? And is this a model that can be transported around the globe or not?
Yeah, it's a really good question, and obviously acknowledging that there's several parts of the world that are in turmoil at the moment, and it's obviously we're watching with sort of bated breath in terms of how these are going to shake up, and it's scary times, right? So I just want to acknowledge that first and foremost, that heart goes out to a lot of people who are kind of struggling with these, and for a brief period of time, my family and I, we spent some time in Europe, and we saw the surge of refugees coming into different parts of Europe, and it was a little heartbreaking to see that. So I just want to take a moment to acknowledge that. But in terms of just investment philosophy and practice, I'd say that obviously there's definitely a trickle effect in terms of what's happening at that scale affects what's happening in the public markets, which trickles down eventually all the way down to in various stages of venture. And, I focus specifically on crypto. I focus specifically on crypto infrastructure. Even more so, I focus on early stage crypto infrastructure. And so just put a different spin on your question, Rebecca, I'd say that more than anything else, at this point in time, I like to think that we go through cycles of sort of infrastructure development. As they say, the very first airplane was built and there were no airports to support it. Eventually there were airports and the airplanes got bigger, then the airports got bigger. And I feel like we're in this airport phase of infrastructure now. And so, we're excited about that. And there's opportunities to build really generationally sort of monumental companies coming in this cycle. So, there's no, I'm seeing a lot of memes about, some VCs taking a step back and maybe not investing as much. I'd say, we're very much active, very focused on trying to partner with founders for the long term, especially ones who are thinking about building really healthy, long-term, lasting, sustaining companies. And that's always been an area of focus for us, and it continues to be the case. So, yeah, to summarize it, I'd say, definitely there's sensitivities in what's happening at the macro scale, and but at the same time, it's sort of, I think it's the past cycles, if anything, have shown us that really interesting companies get built right around this time. So we're cautiously optimistic.
Right. And what about the shift geographically with the U.S.-China tech tensions at a very high level right now? I think we are seeing a lot more investment and a lot more funding coming into markets such as Southeast Asia. And James, you're in Singapore. Are you seeing this kind of flow picking up in Singapore? And can you comment about whether you think that partly as a result of the U.S.-China tech tensions, the money shifting to another, maybe safe haven?
Thank you, Rebecca, and good morning, everyone in Hong Kong. I understand that previous keynote speakers have talked about the opportunities that Hong Kong presents. In Singapore, we are seeing net inflow from exits from within China itself and from US as a result of the tensions that are going on, and for this capital trying to find a relatively stable and, dare I say, safe haven during this period of uncertainty. And Singapore has been a net recipient of such outflow from these two countries, primarily from mainland China. With this money is being deployed, of course, into private equity, and venture capital firms here are also a net beneficiary of it. Just to echo what Anand is saying, not just because there's more inflow coming in, but because there's just continues to be a lot of startups and deal flow happening. So investments are still taking place in Southeast Asia. Back to you, Rebecca.
Okay, very good. Well, one of the big issues has been COVID policies, and that's obviously varied country by country. So how have COVID policies impacted your firm's investment pace and also approach?
Rebecca, I couldn't catch it. That's not a question directed to me. Okay, so COVID, Southeast Asia has emerged relatively well from COVID. The entire region is emerging relatively strong actually, and borders are open. So deals are now continue to be done. And in fact, deals are now slowing down because DD now needs to be done in person. Whereas we were so used to being Zoom and things get settled within a day or two. And now we have to wait for flights to happen and so on. But this is all part and parcel of what we do. And we really now enjoy and appreciate the times that were gone in the last 2 years. So, yeah.
Yeah, no, I can relate to that, sure. Sue, do you want to chime in on this? Some of the questions we already discussed?
Yeah, so I totally agree with the other panelists that during the geopolitical turmoil, actually, during pandemic, actually, we actually have over 10 companies that became unicorns, and their year-over-year growth could be over 900%, which is unheard of. I think the main reason is a lot of things that happened before in areas like China, supply chain, e-commerce, payment actually finally took off in the US. So that's actually very interesting. Reversed something like because of the competition in China was very, very fierce, and now because the pandemic and the supply chain disrupted by politics, and then it is actually very, very fast growth pace in the US. And then for Amino, we laser focusing on investing data as mode and network effect as growth hacking strategies companies. So that's why we've seen not just the investment pace hasn't been slowed down, but also the growth rate, I would say, actually accelerated.
Okay, and are political economic issues impacting your investing? Are you shifting gears in any way? Like maybe you're doing more cybersecurity kind of investments, for instance?
Cybersecurity is something that we actually very interested. However, for a lot of the company we invested, mostly I would say, as like if you wanted to find the next Google or next Facebook, you have to use data as mode and network effect. Cybersecurity oftentimes are enterprise software, and we found it's very difficult to take off. So you have to know who to call. So most of the company in our portfolio, which has reached the unicorns, we were early investors, are in three categories. One is consumer, and second is PLG SaaS like Zoom, Webflow, Rippling, and third is actually Web3. So there's no security.
Okay, so that's pretty broad, and there seem to be kind of safer sectors, like these are not semiconductors, which has been at the heart of a lot of debate between the U.S. and China, and who's going to own the production, and so these are issues that are very much front and center. Jonathan, let me bring you in now, because you have done a lot of work in China and in the U.S. So what about this sector issue? What about the semiconductor tensions? What do you think about how this is impacting venture and how teams should be looking at their approach?
Yeah, thank you for the question. And hello, everyone. So definitely, it is impacting us in all ways. Yeah, I, again, personally spend a lot of time doing investment across, Asia and Silicon Valley. So in the past few years, majorly in mainland China, and of course, combined with a lot of opportunities in the US. So we do see a lot of new developments happening in the past, maybe just few weeks. Our team is actually still spending time analyzing the new semiconductor. Depends on what you call it. It's a new policies from the U.S. government regarding the U.S. persons in China, right, in the industry. So some of our portfolios, well, technically, some of the people may have to quit to apply. But of course, it's quite complex in a sense that there are still a lot of leg rooms. If you look at the detailed policy, there are leg rooms left there. I don't know if it's on purpose or it's a lot of basically mitigation can still be done. And but on a higher level, we are somewhat less concerned. Because again, we did see the leg rooms in there. Second is a lot of things are still dynamic. It's not. Things are still developing. So we won't call it kind of end of day for certain sectors, especially semiconductor, right, or high end or high end what would you call it? Manufacturing needs as semiconductors, right? So all those sectors are still in very high development in China, and we do see a lot of talents and capital still pooling. We're still optimistic about it. On a higher level, we do think it's less concerning than a lot of people are thinking. Because two governments are still trying to find a good balancing place, and the good thing is it kind of creates our new what we call rebalancing or globalization 2.0 kind of situation in the geometry, right? So we do see the mainland government putting more focus. And also, there are a lot of talents from the U.S. still looking for helping in this matter. Yeah. So again, we're less concerned, and we're hoping that what we can call it new balancing or the new inflection points will help on it. And
right.
So as long as there won't be too much unnecessary sensitivities happening, and we are still hopeful about the sector.
Okay, so for everyone, do you try to stay within the runway then of what's safe and what is not likely to be restricted by export imports or tariffs or investments that don't get approved? Or do you try to stay within a safe runway? Jonathan, let me follow up with you on that because you gave a very strong answer before. Do you try to stay within a safe runway?
Yeah. The answer is so again, if we look at all the innovations and the new development, there's still very good runway for investing. And it's at this moment, I think we're still, back to your older questions, we're not really shifting our major focuses yet. Especially in terms of geometries. I guess number one.
Okay. So what is it? Mainly China or it's mainly U.S., right? Or just what is the balance between U.S. and China?
We're still China focused at the moment, with U.S. aspects and the U.S. resources and talents. We're still hopeful on the China market. And again, but it's probably not the same as the 1.0 China economy anymore, because I guess number one, we do see population growth stopped, right? I guess that's one major factor. If you don't look at the new geopolitics, if you just look at mainland itself, that's the first major factor happening at the moment. The population growth, which has been there for at least 30, 40 years, has just stopped. We start seeing negative growth in population. So that triggered a lot of other effects. For example, labor cost increasing, and number three, slowing down in building infrastructures, which used to be the major driving factor in the mainland economy. So with all that, it will never be the same as before, right? So we have to, kind of rebalancing our investment strategies. For example, instead of consumer focused strategies in before, we are now more focusing in technologies and more what we call it digital transformation infrastructures, software infrastructures, right? So artificial intelligence, semiconductor, blockchain technology. So those are the changes happening at the moment, but not, to some extent, it's still what we're doing is still the typical venture capitalists. We're not really shifting in a sense that we're not shifting our asset class yet, right?
Okay.
It's still same geometry, same asset class. It just we're putting more different focus in different sectors with what we call the new globalization or 2.0.
Very good. All right. Thank you. Anand, you're in this crypto sector, which is highly impacted by regulations. Are you going to continue to be in crypto?
Definitely. Yeah. Betting the career on it. And I think it's a little bit more, in some ways it's personal, and there's a little bit of a, some backstory there in terms of my desire to be in this space. But more than anything else, I moved to the Valley in 2001, in May 2001, right as Web 1 was sort of crashing. And I joined this company called Cisco Systems, which kind of got hit the most by what had happened with the crash of Web 1. And we survived that. And out of that, we saw the confluence of mobile and cloud come up. And, now we call it Web 2. We weren't calling it Web 2 then, but we sort of saw the rise that happen. And similarly, we're a little bit of a depressed state now. And, the blockchain is a fundamentally revolutionary sort of technology. And I think it can do some incredible things for efficiencies, for optimizations, and in various sectors across the board, whether that's finance, or that's the next new consumer application that's going to get built. So yeah, more than anything else, and Ravi, who's one of the founders of Lightspeed, recently was talking about this as well. I think we're in favor of regulation, right? I think so far we've been I think even founders have been sort of towing this line, trying to figure out like where the line really is. But and we want to work with the powers that be to ensure that there's sound regulation here, because we want and retail investors to participate and take advantage of this technology. It's just that it hasn't been very clear so far, and we don't want regulators to also operate in a vacuum. Like, we want to be a part of the conversation to be able to educate them and for them to provide sound regulation for us across the board. And it's moving in different it's moving at different paces in different parts of the world. But absolutely, I think there's I don't think Brian Chesky would have said, I'm not going to build Airbnb because regulation is not clear, right? That would have been a big disservice.
Right. Yeah. Innovators always figure out a way to get around regulations anyhow, don't they?
I would say less of getting around, but again, it's one of those things where like just identifying where that line is. And I think, yeah, an investor that I know said this really well once, which is, some funders have the ability to like really understand where the line is and get right up to that point, but not crossing it. And I think those are, I mean, again, we have some precedent for this as well, whether it's Uber or Airbnb. And again, some may have crossed the line, some played well, but more than anything else, out of this came regulation and understanding how these software services benefit consumers, benefit enterprises, benefit investors. And I think that's where we are in the cycle right now.
Right. And India has this creative expression of thought. You hear a lot of conflicting ideas there and everybody's voicing their opinion. So can India come out ahead because of this creative expression?
Well, I'll share my 2 cents. I'd love to hear from the other investors, but I really hope so. I think it's, if any, I think there's a phenomenal thought leader, Balaji Srinivasan, who's been very sort of vocal about in talking about how he feels that India might be ripe for this sort of innovation to really be appealing to. And I mean, wholeheartedly agree. I think there's a lot of different systems at play in India that I think make it, it just makes it like fertile ground for blockchain innovation and for regulation to sort of, again, play well with one another and open up a whole new market. Again, I think we need education and, for folks to really work not to work in a vacuum. And so I think that's the most important thing. But yeah, fundamentally agree. And I think there's a lot of emerging markets where this makes a lot of sense. We're already starting to see some advances in Latin America, and maybe hopefully at some point in time in Africa, India, and so on and so forth.
Right. Okay. And James, from Singapore's viewpoint, would you like to add anything to the last question I had?
I think Singapore has positioned itself very nicely as a place where you can experiment with Web 3.0. And next week's Singapore FinTech Festival will continue to emphasize that point. Even with all the regulatory scrutiny, I think it's healthy for the ecosystem to use that kind of level of scrutiny to also level ourselves up to match the kind of comfort that can allow the general public to embrace Web3.
Right. Okay. I liked your word experiment, and that's good. Okay. Let me just bring up one last topic, which we talked a little bit in our prep. So about family issues, and we just have to keep our answers very short here. With family issues, for years, I know it was the managing partner would be in China, but their family would be in the U.S. or in Vancouver. How are family issues impacted by these kind of geopolitical issues for venture capitalists? Sue, do you want to take that?
Yeah, I think that's really realistic questions for a lot of the people that actually are returnees, and so they have to actually take sides, and so traveling between U.S. and China will be difficult for a lot of people, and so I think before seems like you have really big, two biggest market in the whole world, and you can take advantage of, and also you have two funding source in the whole world that you can take advantage of. But now it seems like a lot of the returnees, they actually have to think, either they wanted to go back to China or they wanted to stay in the US to start a company. I think it's a lot of the so for Amino, we really believe that immigrants can actually provide completely different perspective to solve a problem. Mm-hmm. And then in our portfolio companies, we actually have, I personally actually invested in over 15 companies that became unicorn. And then 2 of them were actually first generation immigrants from China, including one of them is Wei, the founder of Wei is from China. Okay. But the rest, they're from everywhere, from Russia, from Southeast Asia, from everywhere. So from Japan as well. So I just think maybe it's actually a very good time window for a lot of the talents. They don't have a plan B. So when they actually wanted to do something in the US, they don't have a lot of the money actually from China saying that, come back, you have a better market, bigger market, and easier fundraising. So they have to take the most difficult question, because in Silicon Valley, why Silicon Valley is so important? Because of the competition. I mean, if you can do one thing, there are thousands of people around you who claim they can do the same thing. Yeah. But now in China, you're the only one. So easier for those returnees before, but now it's difficult.
Okay. Yeah, Silicon Valley is a really unique place, a real melting pot of innovation, and it continues to be. Whether it will continue to be the leading innovation center in the world is a question, but I think for now it is. And I would like to thank our panelists for your remarks. I think they were very insightful. So thank you again, everyone, for listening, and appreciate it. Thank you again. I think we're going to end there. Thank you.
Thank you very much once again for the wonderful discussion.